Most people believe the stock market is only for experts, for rich people, or for people who already understand money very well. They imagine complicated charts, fast trading screens, and people shouting on Wall Street. But the truth is much simpler than that. The stock market was not created for experts only. It was created so ordinary people could own parts of businesses and grow their money slowly over time. And almost everyone who is successful in investing started exactly where you are right now, confused, unsure, and full of questions. If you feel nervous or overwhelmed, that is normal. It does not mean you are late. It does not mean you are bad with money. It simply means you are at the beginning of learning something important. When people hear the words stock market, they often think about risk first. They think about losing money, crashes, or bad stories they have heard from others. What most people never hear enough about is how the stock market has helped millions of Americans build long-term wealth quietly over decades. Not overnight, not through luck, but through patience and consistency. The stock market is not magic. It is a system. And like any system, once you understand how it works, it becomes much less scary. The stock market is simply a place where ownership of companies is bought and sold. When you buy a stock, you are buying a small piece of a real business. That business sells products, offers services, pays employees, and tries to grow year after year. If the company grows and becomes more valuable, your ownership becomes more valuable too. This is the basic idea. Everything else you hear about investing is built on top of this simple concept. Prices go up and down every day, but the long-term goal is growth over time, not daily excitement. Many beginners make the mistake of watching prices too closely. They check their phone every hour. They feel happy when prices go up and scared when prices go down. This emotional roller coaster is one of the biggest reasons beginners struggle. The market moves every day, but long-term investors do not react to every movement. They understand that short-term changes are normal. What matters is where a company or the market is going over many years, not what happens this week or this month. One important thing beginners need to understand is that the stock market is not a place to put emergency money. It is not a place for rent money, grocery money, or money you may need next month. Investing works best when you use money you can leave alone for a long time. This gives your investments time to grow and recover from temporary drops. People who panic and sell during downturns often lock in losses, while patient investors often recover and grow stronger over time. If you are new to investing, your first goal should not be making big profits. Your first goal should be understanding how the market behaves and building good habits. Good habits include investing regularly, staying calm during market drops, and focusing on long-term goals instead of short-term noise. These habits matter more than picking the perfect stock. Many beginners think success comes from finding the best stock. In reality, success usually comes from consistency and time. There are many ways to invest, but beginners often do best by keeping things simple. Broad market investments like index funds or diversified funds allow you to invest in many companies at once. This reduces risk and removes the pressure of choosing individual winners. Instead of betting on one company, you participate in the growth of the overall market. This approach has helped many Americans build wealth slowly and steadily without stress. Another common beginner mistake is trying to copy others. Social media is full of people talking about quick profits and big wins. What you rarely see are the losses, the stress, and the mistakes behind those stories. Investing is personal. Your income goals and risk tolerance are different from someone else's. What works for one person may not work for you. That is why understanding basics is more powerful than following trends. Many people delay investing because they think they do not have enough money. This is one of the most damaging beliefs. You do not need a lot of money to start investing. Even small amounts invested regularly can grow significantly over time. The most powerful factor in investing is not how much you invest, but how long your money stays invested. Time allows compound growth to work. Compound growth means your money earns returns, and those returns earn returns again. Over many years, this effect becomes very strong. If you are listening to this and thinking, "I wish I had started earlier," remember this. The best time to start investing was in the past, but the second best time is now. Waiting for the perfect moment often means never starting at all. Markets go up, markets go down, but long-term participation is what matters most. Beginners who start small and stay consistent often do better than those who wait for perfect conditions. As you continue learning about investing, you will hear many opinions. Some people will say the market is too risky. Others will say it is the only way to build wealth. The truth lies in balance. The stock market has risks, but avoiding it completely also has risks, especially inflation slowly reducing the value of cash over time. Understanding risk does not mean avoiding investing. It means managing risk through diversification, patience, and education. Education is one of the most valuable investments you can make. The more you understand how investing works, the less emotional your decisions become. Fear comes from uncertainty. Confidence comes from knowledge. You do not need to become an expert overnight. Learning step by step is enough. Every concept you understand makes you a stronger investor. One thing many beginners do not realize is that market drops are not always bad. For long-term investors, drops can be opportunities. When prices fall, future returns can actually improve for those who continue investing. This does not mean you should hope for crashes, but it does mean you should not fear them. History shows that markets recover over time. Those who stay invested often benefit from that recovery. It is also important to set realistic expectations. Investing is not about doubling your money quickly. It is about steady growth over years. When beginners expect fast results, they often get disappointed and quit too early. Wealth building is slow and quiet. It does not feel exciting most of the time. But over many years, it can completely change your financial future. As a beginner, you should focus on what you can control. You cannot control market movements. You cannot control news or global events. But you can control how much you invest, how often you invest, and how you react to market changes. Controlling these things gives you power. Emotional discipline is one of the most important skills in investing. Another helpful habit is investing automatically. When investing becomes automatic, it removes emotion from the process. You invest regularly, whether the market is up or down. This approach helps beginners avoid trying to time the market, which is very difficult even for professionals. Consistency beats timing again and again. At some point, every investor experiences doubt. You may wonder if you are doing the right thing. You may question your decisions during market downturns. This is normal. What matters is whether you stick to your long-term plan. Investors who succeed are not those who never feel fear. They are those who do not let fear control their actions. If you stay with investing long enough, you begin to see patterns. You notice that bad news feels bigger in the moment than it really is. You notice that markets often recover when people least expect it. You notice that patience is rewarded more often than panic. These lessons can only be learned by staying invested and observing over time. Many Americans build wealth not by chasing excitement, but by quietly investing over decades. They live their lives, focus on their careers or families, and let their investments grow in the background. This is what beginner investors should aim for. Investing should support your life, not consume it with stress. As this video continues, remember that you do not need to remember everything at once. Understanding comes with time. Even listening to this right now means you are already ahead of many people who never take the first step. Investing is not about being perfect. It is about being consistent and patient. Before you finish this video, take a moment to think about your future self. The choices you make today may not feel important right now, but over many years, they can make a huge difference. Small decisions repeated consistently become powerful over time. This applies not only to investing, but to life in general. If you stay calm, stay curious, and stay committed, investing can become one of the most useful tools in your financial life. You do not need luck. You do not need insider knowledge. You need time, discipline, and a willingness to learn. As we come toward the end, remember this simple truth. The stock market is one of the few systems where ordinary people can slowly build extraordinary results. You do not need to rush. You do not need to compare yourself to others. You only need to take the first step and keep moving forward. If this video helped you understand investing in a clearer and calmer way, make sure to like it so other beginners can find it too. Subscribe if you want more simple, honest explanations about money and investing. And remember, the most important investment you will ever make is not just in the market, but in your understanding and your patience.